Hey everyone, what's going on? I got a great video for you guys today. A lot of people have been reaching out to me lately and they want to know a little bit more about options, okay? They buy options, they sell options, sometimes they make money, sometimes they lose money. But the one thing that I see with all the people that are reaching out to me is they really don't know what they're getting into with options. You see, options are synthetic shares of stock. And I'm willing to bet that a lot of people out there, when they buy or sell a call, have no idea how much stock it's actually worth. So I'm going to click some buttons, I'm going to get inside the computer, and I'm going to show you guys exactly how much stock your options are worth. So let's dig right in. So, okay, options. They're contracts, okay? That's why you hear options contract, which are agreements to buy 100 shares of stock per option at a predetermined price at a predetermined date. So if we go over to our Thinkorswim platform and we're looking at our options chain for Apple, which expires 19 days from today, I'm filming this on a Sunday, it's an agreement to buy or sell 100 shares of stock. So per every one single options contract we buy or sell, it's either an agreement to buy or sell 100 shares of stock at a predetermined price. Okay, so if we were a seller of the 155 put, we're agreeing to buy 100 shares, okay, at a predetermined price, $155, at a predetermined date, 19 days from now, if the price of the stock is below 155, okay? Now, on the flip side, just to, again, make it very clear as day what options are. They're an agreement to buy or sell 100 shares of stock per every contract we have. So if we buy one 170 call here in Apple, expiring 19 days from now, that is an agreement to buy 100 shares of Apple at the predetermined price of $170 a share at a predetermined date, the 18th of May, if the price of Apple is above 170. Okay, so that's what an option is, okay? And again, I kind of got a little bit ahead of myself, but sometimes that's a little bit confusing to people. I think I broke it down pretty well. But what does that actually mean? Again, guys, they're not complicated. Options are nothing more than synthetic shares of stock. That's it, okay? So what about this? Since all options are nothing more than synthetic shares of stock, okay, how do we tell how much stock each option is worth? So typically, when we're dealing with options, we have these four things that are known as the options Greek. And the options Greeks really just give us a prediction and an understanding of what the value of the option is going to be based off a few different factors, such as the price of the stock going up or down, implied volatility going up or down, the days till that option expires going down, etc., etc. So you have delta, theta, gamma, and vega. Now, for what we're talking about today, how many shares of stocks are options worth, we only care about delta. Delta is the biggest one for what we're talking about today. You'll want to know how many synthetic shares of stock your options are worth. You got to understand what delta is. So we'll get to that right here, right now. All right, here we go. Delta. Delta, for our purposes, is the most important Greek, okay? Or for our purposes, it's the only Greek that actually matters. Again, when it comes to determining the synthetic share equivalent of an option. Those other Greeks are important for other factors, but again, you want to buy 2 calls in Apple? How do you know how many synthetic shares of Apple you have? Delta. You want to buy a couple puts in Tesla. How many shares short are you of Tesla? Delta will give you the answer. So delta, delta, delta is the most important one for this. Okay? So delta is really known as the directional risk of an option, but really it's a synthetic share count of an option. Okay? So whatever your delta is, that's how many synthetic shares you have of stock. Okay? So let's kind of take a look at that really, really quick. So what we want to do is we want to go and we want to get rid of everything that's not delta. Because again, for what we're talking about here, all we care about is delta. Okay? So let's take a look at the 172.5 call expiring 19 days from now. That has a delta of 20, okay? So we're going to click on that, and as you can see, we have a 20 delta. So if the price of Apple, let's say, goes up $1, the expected P&L is roughly $20. It's a little bit more. Now, if it goes down $1, the P&L is roughly down $20, maybe a little bit less. So it's a little bit more on the way up, a little bit less on the way down. Okay? What else gives us this type of P&L? Well, another thing that gives us this type of P&L, as you could probably have guessed, is actually just buying 20 shares of stock. So we buy 20 shares of stock, and Apple goes up $1, we make $20. If we're long 20 shares of stock and Apple goes down $1, we lose $20. Again, very, very similar. Here, again, buying a 20 delta call. That means we're long synthetically 20 shares of Apple. Okay? If Apple goes up $1, we make a little bit over $20. If Apple goes down $1, we make a little bit under $20. So again, if we're long 20 shares, Apple goes up $1, we make $20. It goes down $1, we lose $20. If we're long the 172.5 call, which just happens to be the 20 delta call, and Apple goes up $1, we make about $20, and Apple goes down $1, we make about $20. Now let's see what it looks like in other expiration cycles. Let's say we're going out till next June, 481 days from now. Still getting that 20 delta. Well, this isn't probably the best one for that. No, I don't like that one because the mid price isn't great. What would be the mid price on that? Let me just see here. Let me just add this in so I get those numbers correct. Mark. And I'm going to buy this. And we're going to say we got it for mid price, which is 205 call. It is 450.25. All right, let's say we bought it for that. Again, as you can see right here, even though it's a much different strike price, in this case, it's the 205 strike price, but it's still 20 deltas. Okay, it's still 20 deltas. So again, that's if we were to go out 418 days from now and buy the 205 call, we would still synthetically be long 20 shares. Okay, we still synthetically be long 20 shares of Apple. And again, if Apple goes up $1, that 205 call will make about $20. If Apple goes down $1, that 205 call will lose about $20. And again, the same exact thing. If we're long 20 shares, up $1, we make $20. It goes down $1, we lose $20. And the same thing goes for that shorter dated 172.5 call. Again, if Apple goes up $1, we make about $20. If Apple goes down $1, we make about $20. Again, 20 deltas. If we buy a call, that's 20 deltas. Okay, we are synthetically long 20 shares of stock. Now, what about if we did the inverse? Let's say we were to sell that 172 call. What do you think would happen? Well, as you can tell, we are now synthetically short 20 shares of stock. Okay, so if Apple goes up $1, now we're a loser of about $20. And if Apple goes down $1, because we're synthetically short now 20 deltas or 20 shares of stock, we'll make about $20. And then we could show that by saying, what if we were short 20 shares of Apple? Well, the exact same thing. If Apple goes up $1, we lose about $20. If Apple goes down $1, we make about $20. And the exact same thing happens if we look at this 205 call, which is, again, 20 deltas. If Apple goes up $1 against us, we're synthetically short about 20 shares of stock. So we lose about $20. And if it goes down, because again, we're short 20 synthetic shares, because we're short a 20 delta call, we make about $21. So again, delta is your synthetic share equivalent. So if we were to buy a call, that's how many synthetic shares long we are. So if we were to buy a 20 delta call, we'd be long synthetically 20 shares of stock. If we sold that call, okay, we would synthetically be short 20 shares of that stock. And the same thing goes on the put side. If we were to buy, say, a 5 delta put, and the mid price is what, 122.5? If we were to buy a 5 delta put, we would synthetically be short about 5 shares of stock. So wouldn't you know, if the position went against us $1, we'd lose about $5. If the position went in our favor $1, wouldn't you know, we'd make $5. So this is exactly like being short 5 shares of stock. The exact same thing, okay? If it goes against us by $1, we lose about $5. If it goes our way by $5, we make by $1, we make about $5. So again, that's what happens. And you can see when you buy a put, you're getting negative deltas. And on the flip side of that, if we were to sell a put, we'd be getting long synthetically shares of stock. So if we were to go ahead and sell a put, a 5 delta put, we would synthetically be long 5 shares of stock. Okay? That's pretty much it, guys. So if you ever want to know how many shares synthetically you have of stock, well, look at the delta. And if you wanted to do like an entire thing, let's say you were someone that had a lot of positions going on in Apple. Let's say you were long 2 of these, you were long 1 of these, you were long 1 of these, and you were short 10 of these. Well, all that together, you're synthetically long about 68 deltas. Okay? That's it, guys. Pretty basic stuff. So, again, to cover what we just kind of went over. For options, if you are long a call, your synthetic share count is equal to the delta of the call. Okay? So let's kind of take a look at that here. Again, sorry, fat finger that. Again, for call options, we just went over it, but again, it's good to drive it home. For call options, if you are long the call, your synthetic share count is equal to the delta of the call. So if we're long a 8 delta call here, we're synthetically long about 8 shares of stock. Makes sense. Now, if you're short a call, your synthetic share count is equal to the inverse delta of the call. So again, if we're now short this 8 delta call, we're short about 8 shares of stock. Makes total sense. Now, for put options, if we're long, okay, if we're long put options, your synthetic share count is equal to the delta of the put. Not call, it should be put, excuse me. Changing it, and doing that right on the fly. So again, to the put. So let's take a look at that. So again, if we were to buy a 42 delta put, we'd have about 42 short shares of stock. That makes sense. And then obviously on the flip side, if we were to go ahead and sell a put, we'd have the inverse of that. So if we're selling a 42 delta put, now all of a sudden we're long 42 shares of stock. Makes sense. So what are the takeaways here? Well, an options delta is equivalent to its synthetic share count. That's the big one. So if you want to go out there and you want to say, hey, I want to buy maybe a far out of the money call that has 10 deltas. Well, if the stock goes up $1, I'm only going to make about $10. So now it starts to put everything into context. Now you have reasonable expectations about your profit potential, your risk, and how it all comes together at the portfolio level. If you have any questions, hit me up in the comments below. I'll see you guys on the next video.